day today. So, okay, just give me a second here. Okay. All right, just hang in there, hang in there. It's loading up. It's loading up here. And went out last night. We played today, so okay, there we go. Okay, just give me a second here. Actually, we saw Jerry Seinfeld last night. It was okay show. It was okay. We saw him a few years ago. I remembered it being better a few years ago. I don't know. It's okay. But anyway, probably won't see him again. I think, excuse me. I think, maybe it's my humor that's changing. I don't know. But anyway, it doesn't matter. All right, just kind of killing a little time here. A lot of people still joining us here online. Come on in, gang. Lots room right here. Lots room here in the way in the webinar here. I know it's a cold. I hope you know what. I hope you're keeping warm wherever you are, and I hope you have power. I know the power's out a lot of places, and people are cold and bad weather. We have some bad weather. Let me just check to see. Do we have any more bad weather coming here or not? This is January and February. I guess we're February now, right? Well, let's see. Weather or not. Let's take a look and see what's going on here. Polar vortex to keep frigid pattern locked. Excuse me, over eastern U.S. So that was a couple days ago here. Yeah, we'll check the weather later. I guess we don't really need to do that now, but I know it's very cold, and especially down south where you're not used to it. I'm in the Western New York area, and we're kind of used to cold weather, cold and snowy weather. You know what I'm saying? This is nothing for us. We don't put away our lawn furniture until there's like 4 or 5 inches of snow on the lawn furniture, and then we start heading in. So, all right, a lot of new people online here. Come on, gang. Question here: how's the tooth? Very good, thank you very much. I ended up having an emergency kind of a thing here. I had a tooth break on me the other day, and there's a little thing sticking up there. I think it was like a post or something, screw or something. I think it was this tooth already had work done to it. So, okay. Anyway, I got that fixed. I got to go back on the 10th for an implant. Oh, fun and games, right? All right. So here we are, and I think it's now 8:03. We're going to get started here. Yes, when the temps go down, profits go up. Trading room link for January the 30th. Uh, Trading room link for January 30th. It's up there, isn't it? Might have to ask John on that one. I think he did that one on Friday. So he is not on. We give him the day off. And but he'll be back tomorrow morning, as will I. God willing, we able. Nothing is for sure. Nothing is for sure. A couple of years ago, I ended up we're in the trading room, and I had to cut it so short, like emergency short. My wife had to take me to the hospital, gallbladder attack. Wow, those are the worst. That's the worst. I don't think I've ever, well, I don't think I know for sure, 100%, never had pain as bad as that. Hope nobody ever has that one, let me tell you. All right, they say there's pain and there's childbirth and there's gallbladder. I believe it. All right, gang, let's get started here. Let's hit this button right now. And okay, we are starting here. All right, welcome to DayTradeSPY.com's weekly fireside chat. Excuse me. We got the snowflakes coming down as we're shivering up here in Western New York. Actually, we don't have it as bad as you guys down in the South do. So I feel your pain though, because we normally have a lot of that bad weather up here. So stay warm, stay inside. We should have lots of supplies, food and stuff. Make sure the food that you have you can actually eat without having to fire up a electric stove if you don't have power. That doesn't work very well. Learned that the hard way. Anyway, my name is Hugh, and it is February the 1st. Good thing is, February is a short month. And there's a picture of me, right? There we go. So it is a short month, and anyway, we're gonna have some fun. We're gonna try and make the best of it, right? So spring is around the corner, folks. Folks, I'll tell you, there's a questions box. Please use the questions box for any questions or comments you might have. And that's it. We're here. All right, so I'm going to let this disclaimer, I'm going to leave this up here for a minute. Well, not quite a minute, maybe 20 seconds so you can read it and understand that, well, I'm going to be quiet here for 20 seconds here, so that give you a chance to read it. Maybe 10 seconds. Gives me a chance to get a drink here. I have to hydrate. That's what they call it. Used to be quench your thirst, but we don't call it that anymore. We call it hydrate. You have to hydrate. Mm. All right, you alone are responsible for all your own trading. Excuse me, and past performance does not guarantee future results and all that said. Good trading, folks. All right, so there I am. There's a picture of me. We're going to do a little survey here, folks, just to get an idea as to what our people, our visitors, our participants, what kind of age group you're in. And we're going to check with our social media people, try and attract a little younger crowd into this world of options trading. So please, in the questions box, I am going to take a minute here and do the survey. Okay, all right. One, two, three. Okay. Okay, let's see. One, two. Bear with me. Okay. Wow, okay. Are you still holding the auto warning gate trade? I'll get to the questions a little bit. Uh, E, F, E. Okay. E. Okay, just I thought. I actually have a bet with somebody here. Um, D, just bear with me. I know I want to get these things here. C, C. Okay, okay. Hang on a second here. And there's an A. Okay, all right, good. I'm having fun with you guys. I'm having fun with you here. Okay, I just you need to get a. I'm trying to get a survey here. We're not gonna D. Okay, one, two, three. E D D. Okay, D D. All right, that's good. Okay, that's kind of what I figured. All right, okay, that's cool. Most people 60 to 70, then 70 to 80, 80 plus. Nice. Um, and we have some. Well, we've got, I think, two or three under 60, whatever. Anyway, all right, that's what I thought. Okay, so yeah, we're trying to get some younger demographics in here. And maybe what we'll do is, oh, what happened here? That's not what I wanted. Oh, let's get back. Okay, let's just stop this. Let us stop that. Go right back to, I think I hit a wrong button and then it just flipped over. So, okay, so let's go back to this one here, this page right here. Show current slide. Okay, good stuff. Thank you very much for that. All right. Thanks for your patience on that. So, meet your hosts. My name is Hugh. Probably many of you have heard the spiel before, so I'm not going to bore you with it. Just know that I developed my strategies, my approaches to the in the trenches trading. That's what I like to call it, in the trenches. All right. Took a lot of courses before. I stumbled on this whole thing. It was never meant to be this way. I was probably supposed to retire as an accountant. Uh, I never finished that. I didn't have the personality for it. Not a shot against accountants. I just had this entrepreneurial spirit that, and then I got an internal audit and whatnot. Anyway, I learned how to trade years ago. Traded for myself, made some bucks, few bucks. Did very well on some of these trades. Some of these trades, I got very fortunate and made some good money and had a lot of fun with it. And then people would start asking me, okay, Hugh, what are you doing? Got to show me. And it was in 2010 when we started to publicly teach people how to trade options on one stock, one strategy, 1 hour a day, day trading, SPY options, the S&P 500. I love SPY. You know what? It's not always easy. I'm not going to kid you. Okay, I'm not going to lie to you. It's not always easy. We have our challenges, and I find that things come in waves. Those good trades, those really successful trades that come in waves, and you have a series of, challenging trades. I'll call them challenging trades. So, and whenever you have those challenging trades, so as soon as you recognize it, pull back into paper trade until you kind of figure out what's going on. This last week was one of those weeks. We'll talk about that in a little bit. Anyway, but I did have some pretty good success, and people started to course me to show them. So we started a website. Um, I think back in the days it was called estockoptiontrading.com. And I just kind of pulled that out of the air. No rhyme or reason for that. But what happened was we grew. This was never supposed to be like this. In fact, when we first started, we were kidding and laughing and stuff, and said, "Oh, this will go for a couple of weeks, maybe a month. It'll fizzle out. You know how it goes." Uh, but as it turned out, it ballooned up, and people started throwing money at us. Got to show us how to teach us. You got to teach us what you're doing. So I started teaching them. Start with the inner circle. Tell you about that a little bit. The trading room, a bunch of other stuff, ebooks, courses, different things. And then we got the attention of Eagle Financial Products. They brought on John Johnson, a retired lawyer, retired from Eagle as well, and we now do the trading room together. So I look at short-term breakout trades. Okay, that's kind of like what I like to do, and multiple times a day. I like to get in, make a few bucks, get out. Get in, make a few bucks, get out. I'm not into these. I used to be a long time ago, swing trades. But I found they're just too stressful, especially in the fact that I just didn't have the patience to wait these things out. And with the way we trade, you buy them first and you hold on, and you're kind of losing the state of loss. It was funny because I can tell you stories. Um, when I first started, I couldn't understand it. Sometimes I would make a lot of money, and other times I would try to do the same setups I had the day before, but it's a whole different thing, and I would lose a lot of money. I said, what happened between yesterday, which was so good, and today's just horrible? And then I remember somebody said to me, "Well, do you look at the thetas at all? Not the thetas, the Greeks?" I said, "Oh no, I don't look at the Greeks." They said, "Well, maybe you should." You know, I can't remember who said that. It was very, very nice, very diplomatic, and thank you for that, whoever that was. But uh, you know, a lot of people were involved in my success. This is not something that I had done on my own. I will tell you, I've had the encouragement, the lessons from a lot of people. Sometimes they were hard lessons, and the market is the biggest teacher out there. The market is the biggest humbler out there. Doesn't matter who you are, doesn't care, doesn't give a rat's behind who you are. The market will humble you very quickly, very decisively. It'll knock you down to reality very quickly, and it takes no prisoners. Doesn't even apologize. Okay. But anyway, I learned a few things, and I learned them the hard way, and that's what I take now into my trades, the lessons that I learned the hard way. They're not always, it's not always an easy way of doing it. But anyway, we brought on John as well. Now, John does a similar thing. He also trades the S&P 500, SPY, but he comes at it from a different perspective. Excuse me. He'll look at things in a different light than I do. Valid. They're both valid. I like to keep I like to keep my indicators few as possible. I used to, I used to, I used to have a lot of indicators on my charts. So much so that you could hardly see the price charts, the price candles. And, uh, and then I realized this is not good because as I'm waiting for everything to set up, and by the time it actually sets up, and then I get into the trade, it's the end of the trend, right? Now I'm on the downside of the whole thing and I'm losing money. So, oh my gosh, this is horrible. Then I determined, well, what indicators do I really need? Give me no more than a handful of indicators that I really need, and then get rid of the rest. Dump the rest. Just get rid of them. And that's what I did, and I found that my trading improved. Because at the end of the day, you can only make money or lose money or break even, right? There's no other way you can do it. You can make money, lose money, or break even. So, of those two or three scenarios, right? You just have to get one of them right. And anyway, I started making some money, and like I say, I've got my own set of indicators. John has his own set of indicators, and he's actually he's very good. He's excellent. He's excellent at it. And we tend to prop each other up. Sometimes he's in a bit of a funk, and sometimes I'm in a bit of a funk, and we'll kind of, keep each other going and stuff. But what I find is that when we both, for example, in the trading room, when we both talk about a particular setup that's looking to happen, and we think that the market's going to go down, and he says the market's going to go down, and I look at it and say, you know what, I think the market's going to go down as well, and we narrate this in the trading room, you might want to buy some put options, right? And for those of you who don't know, we're in the options world. We buy first, then we sell. No spreads, no naked positions. They're calls and puts. If you expect the market to go up, you buy a call option. If you expect the market to go down, you buy a put option. Call up, put down. And then when you make a little bit of money, you sell, right? Anyway, John used to be a litigation lawyer turned options trading trader. Highly acclaimed, many industry publications. His philosophy is very simple. Take what the market will give you. He's a lot like me, I'll do scalps. He kind of does scalps too. Might go for a little more. He'll figure out more where the stock is going to go that day, and he'll stay with it a little longer. He might pick up a quarter on a trade where I might be happy with 15 cents or something. So, but anyway, they both work very, very well, and we work very well together. We have a lot of fun together, and that's what we do. All right, so let's move on, folks. Announcement: Spy on the Market. This is our weekly newsletter. This week's topic is the effects of theta loss. The effects of theta loss. Um, You'll want to get this because it's kind of important as to why we like to buy a little bit longer term out, even though we're looking to get in and out, and hopefully in a few minutes. But you still need to buy time because the more time you have, the less data loss you have. Anyway, we'll talk about that in the newsletter. Now, if you are not a subscriber, all you have to do is go to our website, daytradespy.com. And when the little pop-up comes up in the front there, just leave us your email address and you will get the newsletter, Spy on the Market. Now, if you don't want to subscribe, but you still want to see the newsletters, you can still do that too. All you have to do is go to Day Trade Spy. Let me just pull it up here. It's right here. And up at the top left where it says Spy on the Market. Excuse me, Spy on the Market. Click on newsletters, click on that, and you can go down and just click on all of these newsletters that we had written over the last several years. I think we have like 120 some of these things last couple of years, but and there's some really there's some pretty cool ones in there. I mean, they're all pretty cool, but that's what you want. So anyway, Spy on the Market. That is the name of the newsletter. Very free, very easy reading. Takes you only about 3 minutes to read this thing, and not even that, 2 minutes. If you're a slow reader, it'll be 3 minutes. But all right, this week's topic: the effects of theta loss. Also, want to remind you folks, our live training seminar is coming up in April. Now, you want to get it on this. You want to register early. Make sure you get a seat. We're only taking 100 people, right? We're only taking 100 people. It's going to be at the BWI Hilton, Baltimore, Maryland, April the 21st and 22nd. Live two-day event in person. John and I are going to be there. We're going to be hosting this. We're going to be talking about our trading. I'm going to teach you some stuff, and hopefully you will walk away with a very renewed confidence and knowledge base with which to work, with which you can day trade options on SPY and actually make some money. So we fully expect you to do very well in the trading world after you take that course. It is not free. Nothing is free. Somebody's got to pay the freight, but they're very good prices. The early bird pricing, I don't know if that is still on. I am going to remove that because I don't want to promote something that may or may not happen. Okay, I don't know if that's still the case or not. But you're going to want to contact customer service at DayTradeSPY or click on the link to purchase, and I will give you the links at the end of the session so that you can actually make the purchase if you have not yet got into the so let me just go back here, got into the early bird special. Okay. The early bird special includes hotel rooms and different things, but you should get into it, even if you have to pay full freight, full price. Believe me, it's going to be worth it. All right. Um, John and I are going to be training it. We're going to be doing it. It's not like it's got our name and somebody else is going to do it. Not at all. We are the ones who are going to be there live and in person. Learn advanced strategies and techniques. We're going to talk about all the things that we do. No stone left unturned. We're going to answer all your questions live right there. Participate in our live options training. We are still going to be doing our live training sessions from Baltimore. And you'll also get to network with other traders, get to know other members and traders. And, it's just kind of cool. The night before, we're supposed to roll in on the 20th of April. And that would be, let me just see, what day would that would be? The 20th of April. I got my calendar here. That would be Monday night. Monday night, and we're all going to meet down in the lounge, down in the bar, and hang out, exchange horror stories. Probably, I don't know. We'll see. We're just gonna get to meet and greet. That's what they call it, a meet and greet. And I like to see all of you people there. The funny thing is, you know what? When I look at the list of people online here, excuse me, I see some people that have been with us for a long, long time, and I love to see that. And gonna, shout out Alexander, Ali, you, and can't give the last names because of what do you want to call it? Privacy issues here. Beth S from Toronto, I remember you. Chris, David, Diorani, yes, for sure. Had the pleasure of meeting Diorani on a cruise, Caribbean cruise, years ago, with my good friend Sonny and Pete. Good friends. Haven't talked to Pete in a long time. Sonny, he's passed away several years ago. Missed the guy terribly. Gene, Irene. Wow, look at these guys. James C, James L, Jeff D. A lot of these people have Johnny L, I know you've been around here. Johnny, buddy. All right, dig into your pocket. Okay, you gotta dig deep in your pocket and take these courses and different things that we offer you. All right, Phil C. Oh my gosh, Phil T. Rich. Oh my gosh, Rod, Stan, Terry, Suzanne. A lot of these people, Bill, Tucker, William. A lot of these people have been with us a while, and it's like almost like we kind of almost know each other, right? Almost like friends or something. And so we'd like you to come out to this thing if you can, right? I know it's a few bucks, but believe me, you should make the money back very quickly. So anyway, coming up, that is April the 21st and 22nd. Oh, excuse me, book it now because believe, excuse me, believe it or not, time flies real fast, and before you know it, it's going to be April. And I know it's very difficult to imagine what the weather's going to be like then because we're in a deep freeze and cold and no power and snow up to our roofs and stuff like that. And but come, middle end of April, it's all going to be different. The flowers are going to be out, birds are going to be chirping, and it'll come back to life. So, all right, folks, here's a look at what happened last week, real quick. Go through this. I'd like to spend a lot of time in these, the history, because the history, history is the past. The future is a mystery, and the present is a gift. So we gotta look at now and what's coming up. That's gonna look at. But anyway, on Monday, the S&P closed higher to begin a big week. Major tech earnings. Oh my gosh, I was so excited. Everybody's excited. They're all anticipating huge earnings. The Fed Reserve is going to bring an interest rate announcement on Wednesday. The anticipation drove the market up, and we're seeing new highs. All right. We had another record close on Tuesday. Actually, it came into after hours Tuesday night, early Tuesday morning. I'm not really sure what time. Hit another record high on SPY, just under 700. Now, the S&P 500 did break 7,000. So I thought for sure SPY was also going to break it, but we came in with it. What's this, $1.04 of 700. 700 seems to be a very top end here. Right? The 700 seems to be very, very top end right up in here. So, but it was in the middle of the night there, Wednesday night. The Bears wrestled it down, and early on Wednesday morning ran back up a little, but the Bears wrestled it down. A lot of earnings optimism. Come Wednesday, excuse me, the stocks wavered as Fed Chair Powell signaled the Feds mentioned that they're going to be on hold and with a little indication as to when the rates may fall again. Basically saying we're in no hurry. We are going to watch the data and respond to the data. Something that he's been saying all along. Should be no surprise there. And a lot of profit taking on Thursday. Profit taking, but also Microsoft reported their earnings. They tumbled something like 10% on disappointing outlook. Something about cloud, I think cloud storage or something, I can't remember now, but that brought down they brought down Microsoft a lot. Excuse me, Microsoft being a big player in the S&P and the Nasdaq, it also brought down other stocks with it like that. And including ServiceNow, that dropped 9.9%, just under 10%. Tesla, they also weighed in, they fell 3.5%. It was not a good day on Thursday. Plus, a lot of profit taking brought us right down. And as soon as we brought down, as soon as we stopped, broke that support, there's your neckline right there, that support. All of a sudden, the thing, okay, tanked, just jump into puts, tanked right down. And we got some momentum, some more support. Let me see if I can maybe add in draw in a line here. Draw. No, I want to insert. If I insert a line, there's a couple necklines to watch when you do these things, all right? There's a neckline right there. And I'm going to outline this here, yellow. See that neckline there? I'm going to thicken it up a little bit here because this one really, it's really hard to see it. You see when it drops that neckline, you know it's going to drop, it's going to fall. And here's the other thing. When it fell, wow, it just tanked. It tanked, and then it tanked even. You couldn't keep it down. Here's another neckline down here, right? And then when it blasted through that second line there, that's it. It's going down for the count. Now we're going back several days, few days, whatever it took to find support. And frankly, I thought we were going to find some support. I've been watching it, but the thing is, I wasn't sitting in some calls at the time, so I was trying to play the calls, at least watch the calls. But I recognize that this baby's going down. I just have to wait until the stock gets through its little temper tantrum. Well, it wasn't really a little temper tantrum. We're up around what 697.5, dropped down to 680, 84.5 or something. What is that? That was like a 13-point drop in the morning. But the nice thing is, I also know that when it does go down like this, at some point it's going to find some level of support. Don't know exactly where it is, but at some point it's going to attract the buyers to come in and bring it back up, and that it did. Before the end of the day, we recovered. Came in from what 684 and a half, back up to about 694. Recovered about 10 points. Recovered about 10 points here before the end of the day. Talk about a wild swing on that party, I'll tell you. Wow, crazy stuff going on. And then Friday came around. Well, we had some bounce, some pretty wild bouncing actually. As the pundits tried to unpack Trump's uh, Trump's pick for the Fed Reserve. Who said bounce while they're trying to unpack Trump's pick to run the Fed Reserve? So this is the funny thing. So he brings on Kevin Warsh, except uh, Warsh is hawkish, or he has been hawkish. So something we don't know about. Maybe he's turned a little dovish. I don't know, but I know that Trump wanted somebody dovish. And I remember in the trading room we were talking about, well, who's going to be the next pick? Who's going to be the next pick? We had sort of placed a couple of picks. I thought Michelle Bowman was going to be in the running. She was in the running, as it turned out, but she was never picked. But we did get some recovery. Brought it back to close just under 692 by the end of the day. Some pretty wild swings in there Friday as well. So it was kind of a really wild week, to be honest with you. And it was kind of hard to trade that too. Let's take a look at the seasonals. So this is a seasonal chart. For those who don't know, the blue line at the top is where SPY is now. The red line is a composite of the last 5 years closing price of the daily charts. All right, so if we zoom in a little bit, see what happened last week. Well, SPY rose 4 points over the last week. And historically speaking, again, over the last few years, SPY rose about 5 points the following week as well. All right, so and this is kind of what it's all about. So, what happened last week? Well, and this is the crazy thing about it. At the beginning of the week, a lot of us traders, investors, we really believed the market was going to just keep going right straight up here because of good tech earnings, high cap stock earnings, the Fed Reserve. There's going to be a good economic data with some inflation numbers, PC numbers, all these wonderful things, and yet it hit a spot. But the Feds did hold the rates steady, and if I spell that correctly, even better. They held steady as expected, Pace of easing is likely to slow. That's what they said. So that's something that caused the markets to go down a little bit here. Fed Reserve member from 20, I think it was 2006, 2006. I don't know what happened here. What was I? Oh man, was I drinking something? No, no, no. It's just maybe I was a little tired when I did this earlier today. Fed Reserve Board member from 2006 to 2011, Kevin Warsh nominated to succeed Powell. While hawkish, he appears to have shifted to dovish on interest rates. And you know what? And that might be a good thing. In other words, he is able to pivot when the times need uh, to pivot. And that's what I noticed about Trump. He will pivot. You might not like his policies or his pronouncements, that's right, we're putting 100% on Canada if they make a deal with China, or we're putting 50% on Europe if they hold us up on Greenland, or, all these things that he comes out with. But and he writes about this all in the Art of the Deal book, how he does it. Comes on strong, then he backs off, and he gets what he wants. But but he will pivot. So when he does see things aren't going really the way he wants them to, he will recognize it and pivot and go forward. So I think that's a sign of strength. And I think that probably, and I don't know for sure, but if Warsh was hawkish in the past and now he's dovish, that's probably what happened. That's probably why Trump wanted him in there. So he will probably recognize when something needs to be done, and they'll do it. That's my opinion, my guess. I don't know any more than that. Anyway, key Magnificent Seven companies reported earnings, beating estimates. Excuse me. Even Microsoft beat the estimates the other day, but it was their outlook on the future that caused the stock to drop. So it's not just the estimates. A lot of times too, I noticed that the estimates will come in, or the actual earnings will come in below estimates, but the stock goes up. The stock goes up. Cisco was a prime example of this. I could never trust Cisco with their earnings. They could beat their estimates 30%, and the stock will actually drop 30 or 40%. And you scratch your head and say, how did that happen? Why? Any normal person would think that if you're going to beat the estimates by that much, the stock should shoot straight up. So there's a lot of factors that go into this thing. And if you're ever trading earnings, you want to trade earnings. It's a very delicate thing to trade. Because very often what happens too is that the volatility increases as it goes up to earnings, and then the earnings come out and they beat the estimates, and this happens. They beat the estimates, and the stock goes up as expected. And then you wake up in the morning, first thing you do is you check your stock. Oh, good, it went up. So, my gosh, this is great news, great news. Can't wait to get and open up the trading platform and cash out and make a ton of money. And then you do, and then you look at your option. Your option actually fell in price. Wait a second. You say, how did that happen? Well, it's very simple. The event that caused the volatility to go up in the first place, the release of the earnings, that has now passed. So we now know what the news is, and therefore the volatility drops, and hence the price of the option. So that option that you paid $5 for, and according to your estimates before you looked at it, should have gone up to $7 or $8, is now sitting at $3. And you're scratching your head saying, wow, I can't believe that happened. Well, that's what happened. They sucked the volatility out of it. After I discovered that, I stopped trading the earnings trades. It was just, I remember one company, I can't remember now what it was. It was a telecom company, Nortel or something. I don't even know if they're in business. I don't think they're in business anymore, but they actually missed the estimates by something like a quarter point. Pennies. They missed it by pennies. And man, did the market ever punish them. Yes, I lost thousands on that one, but anyway. Congress reaching a deal to extend funding. I'm not sure where that sits right now. I think on the weekend, and I'm sure somebody's going to tell me, partial shutdown regarding the Department of Homeland Security funding after the situation in Milwaukee there, I guess, Minneapolis, I should say, Minneapolis. Um, there's threats of funding cutbacks and stuff. But anyway, I'm not sure that news will wash up by tomorrow morning. That's going to be all news. So here's a look at some charts. Inflation moderated, but remains above the 2% target. They're still working on getting that. PC inflation actually popped up a little bit here at the end of November. So these are the latest data that we have here. But they're working on getting this thing down. That's kind of that's the target, right? That's what they want to do. The analysts are estimating that earnings are going to continue to grow well into next year. all year long. These are the numbers they think they're going to go. Let's see. Q4 last year here, 10.1%. Continuing on, probably much of it driven by artificial intelligence, and so we'll see where that goes. All right, so there's going to be I think there's going to be some good profits to be made there, and if this continues, and if we have some dovish activity with the Fed Reserve as far as interest rates, I think 2026 and into 2027 should be a positive year for the stock market. All right. Excuse me. The S&P rose 0.3% this year, whereas the other two indices, Nasdaq, Dow Jones, dropped a little bit. Last week, the S&P also dropped, I think by about 0.3%, not much. But year to date, we're doing 1.4%. And if I extend that out over the next 12 months, that should give us a yearly rise of about 16, 17%. We'll see if that continues. Nasdaq year to date 0.9%, the Dow at 1.7%. All right, coming up for news Monday, ISM, Institute for Supply Management, Manufacturing PMI report. JOLTS job openings on Tuesday. We've got ADP non-farm employment change and services PMI report on Wednesday. Thursday, unemployment claims and a non-farm employment change, unemployment rate, average hourly earnings. We've got some employment numbers coming up on Friday, along with consumer sentiment and inflation expectations. As far as volatility is concerned, we're kind of ranking it here as medium on Monday and Wednesday, high on Tuesday, Thursday, and Friday, and watch for the news so that when you see President Trump scheduled to speak, expect elevated volatility then as well. All right, elevated volatility as well. Ladies and gentlemen, we have many opportunities every day on the stock market. We show you how to find them and how to trade them. That's what we do. That's our job. I'm not very photogenic, and I think my hair, I fell asleep earlier this afternoon. My hair is kind of sticking up here. But we'll get to the questions a little bit here, folks. We're going to get to some questions a little bit here. Okay, hang on. Okay, so what we're doing here is the 2026 goal, tracking all the trades that we do in the trading room. Recording only, buying as we're only as if we're only doing 5 contracts. I don't know about John, but I can tell you I usually do more than 5 contracts. So we don't do exactly what we do, but only if you were to be buying 5 contracts, how much would you end up with at the end of the year? That's what we're doing this year, okay? And this is actually good because it facilitates people jumping in and out of this all year long. You don't have to start at the beginning of the year, which is what we did last time, right? All our trading room trades are going to be recorded now. Anything we do outside of that or something that might not narrate, those are not included. So just follow along and you should do okay. So it's not a separate challenge trade, it's just the goal. And this is, of course, something that we're doing in the trading room. Anybody who's in the trading room is probably doing pretty good. All right, so here's what we're doing here. A bit of a tough week this week. I'm not going to kid you here. Um, we're still year to date ahead of the game by 32.25. All right, we did have a couple losers here this week, including one that I took a hit on a few days ago. Actually, I bought that one for 517. I sold it for 202. Could have held on to it because actually, well, now that's going to expire at Friday, this coming Friday. But I didn't want to hold on to it over the weekend. I didn't want to lose data loss, time loss. Again, the longer you trade these, right, um, the more loss you're going to have just by holding on to them. An option is by like buying an ice cube. It melts on you. It's not a buy and hold strategy. There are buy and hold strategies with options, but we don't do those. Those are selling premium. And it's good to sell premium if you really are very convinced that the stock is going to go in the direction that you want. But if it turns against you, you could be left holding the bag on the stock. Not so sure you want to do that. I know I don't want to do that. I don't want to hold stock anymore. I used to do that a long time ago. Now I just want to make money. Anyway, here's some stats year to date. We made 91 trades. 91 trades in January, folks. That's pretty good. That's between John and myself in the trading room. And if you consider 5 contracts each, our average investment is just under $2,600. We had 79 wins and 12 losses. And some of those losses were pretty good too, I should tell you. Year-to-date gains, 32.25. 32.25. All right, we hope to ramp that up even more in the next next little while. All right, so but we shall see. All right, let's do our 2-minute tutorial. What are we going to talk about here today? Oh yes, Finfluencers. I love this. This is so here's wow. This is what we traders are up against now. Finfluencers. These are financial influencers on social media. These are people, they love to dispense advice, investment tips, get rich quick schemes, scams, whatever you want to call it. And yes, product promotion on social media platforms. And apparently, a lot of the Gen Z and the millennials, apparently, and I did some research into this. I don't have the numbers handy, but a huge amount of this group of people have, and I think the average was something like $4,000 that they would consider investing in the stock market. And so the good news is that this generation, this group of people, see the value of investing in the stock market. I'd like to see that, as opposed to just blowing it on video games or whatever they do. I don't know what they do. Uh, when I was at that age, we would just go drinking, drinking, right? Anybody with me on that? But the memories down at yeah, Mulligan's Brick Bar and Allentown and stuff. And anyway, reminiscing here, folks. But folks, let me tell you. So this group, all right, recognizes the validity and importance of investing for your future. The only problem is that they're highly influenced by these finfluencers, finfluencers, and there are risks in that. And I was kind of hoping that there would be more younger people online here, so I can kind of tell them, watch for these risks. But maybe you know some of these people. Maybe you know you have some kids or grandkids. You can tell them, say, guys, you know what? A lot of these, if not most of these influencers, they actually lack the expertise. These are, many of them are entertainers. They are not certified financial advisors in any way. And not that you have to be, but you have to come with some solid knowledge and experience. Um, you know, and 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 they might have had some success along the way, but the key is not that everybody hits a home run sometimes, right? They say that even a stop clock is right twice a day. But the thing is, you have to be able to replicate your strategy over and over and over again. And a lot of these people, they don't. So they will promote something, maybe their program or stock or whatever, uh, or they'll talk up like a GameStop, several years ago. We had that frenzy. It was like a feeding frenzy, is what it was. And yes, some people made some money, but a lot of people lost a lot of money. And some of the horror stories where some of these college kids would take their college fund money, right? Their student loans. Oh, I'm gonna make a ton. I'm gonna take my student loan and invest it in GameStop, and off it goes. And the market drops on it. You end up selling it all for loss. Now they're all out there delivering pizzas, trying to make up the money on it or whatever. Um, the SEC, Security and Exchange Commission, also cracks down on some of these people. There's a famous story here. I think it's a couple of years ago. Kim Kardashian, she was fined something like $1.26 million dollars. Let me correct the typo on here. $1.26 million dollars. There it is for unlawfully touting crypto. She was doing something with crypto. So I don't know the details. I kind of forgot the details on this. I remember this was a big story, and there was a lot of money to pay for her getting up there and saying, "Oh, buy this or whatever." Um, these people, and again, I don't know them all. I don't even know them. I don't follow them, but they lack the nuance. They don't have that expertise. And here's the problem: a lot of these, especially the younger people, wrongfully put their whole trust in these people, and they suffer losses. So I think it's very important to be careful about this. Don't just blindly follow somebody that you have no idea what they are, what they do, what their track record is, none of that stuff. Now we're kind of on social media. We're getting into the social media thing ourselves, and but you know that John and myself, we've got a track record, and we're backed by Eagle, and Eagle is not going to take on somebody who's not somebody who's valid, right? Anyway, that's the 2 minute tutorial. Watch for the finfluencers. All right, let's take some questions, folks. You've been patient long enough. Let's take some questions. All right. Okay. Trading room sent today for February 2nd is for an event on January 30th. Oh, really? Okay, thank you for that, Jeff. I will check into that and send out update. I'm just write that update trading room links. I will make sure the trading room links are going to be updated. I'll check into that. Okay, Jeff, thank you so much. I know that went out late today. In fact, just not too long ago, but I will take a look at anybody who was getting a trading room link and it doesn't work. Watch for the updated trading room links. All right. Okay. Are we still doing the out of the gate morning? Absolutely in the trading room. Yes, we are. That's one of our favorite strategies out of the morning gate. We've had some challenges on that, but here's the thing in the trading room. Even though we go for 6%, there have been times recently where we say, we're going to cut this off. We're going to cut losses. We're going to cut it short, whatever. And even though we're not going to, it's not in stone that we're going to go for the 6%. Sometimes we just might have cut it short if and when the stock reverses and goes crazy on us the other way. That happens. It's been a very bouncy kind of the last few days, and we all thought, a lot of us thought by Friday we're going to see record highs. Well, that record high came Wednesday, and then the market came down pretty good. So it can go either way, right? You got to be very careful on these things. So anyway, yes, we do the OMG, which is short for out of the morning gate strategy. We do that in the trading room every day. If you are not in the trading room, you got to get in the trading room, folks, right? Okay, trading room. Yes, yeah, get back in the paper trading room. Let me get back to the question a little bit here. I'm going to get back to questions. There's a question I want to get back in the trading room. I recommend the trading room, and I recommend starting with paper trades and then just transition to one contract, two contracts, build it up from there. Build it up from there until you've got the knowledge and the confidence, the experience. Then you're going to make some money. Folks, we have some solid gold, learn and earn actionable plans, and it's exclusively right here. Now, you've got these QR codes. If you miss them now and you want to join in and subscribe to these things, don't worry. The QR codes will be up there on the board here, up on the PowerPoint at the end of the session as well. I'm going to invite you into our inner circle. Every morning, you're going to get the morning market analysis synopsis as to where the market's going to go today. We've got a very good idea where we're going to go today. We're also going to send you a follow-up report later in the day. You're going to be invited to our Wednesday night interactive meetups. You miss them, they are recorded, concise, informative, and let us do the heavy lifting on this, folks. And believe it or not, the price on this thing is so incredibly low. I'm almost embarrassed to ask for this because I think that this is basically what is this? Is this like a Starbucks coffee or something? I haven't been to Starbucks in a while. Can you even get a coffee for 5.75 a week? I don't- I can tell you at 2.99 a year, everybody should be in the inner circle, even if you only use it once a week. I think it's worth your while. The inner circle, it's was it 2.99 a year? 2.99 a year. Hey, listen, if you don't like it, cancel. All right. Day trade spy signal. Now, a lot of people they're not able to be in front of a computer watching the computer at 9:30 in the morning. But you have your cell phone with you and you've got your platform on your cell phone 3 to 5 times a week. This is algorithm based and it's in the mornings. It's sent to your cell phone as a text, also your email. The key here is to buy it right away, immediately put it for sale for a 5% profit target. If not sold by the end of the day, sell it at market price. $3.99 a quarter, $14.95 a year. You're not going to go wrong with these programs, folks. We also have another, that's the signal. We also have another program called the Pick of the Day, similar to the signal, but a little bit different. This one is determined by two people, John and myself. We discussed this in pre-market, and we, all right, humans, determine is this going to go up or down today? Where's the propensity? Where's the likely move? Is it going to go up or down at some point to give us 6% gain, right? And we send this to you just after 9 o'clock in the morning in your email box, all right? It's not does not go to your cell phone, it goes to your email. So this here is anchored in time. What you want to do here is you want to buy it at the market open and immediately put up for sale for that 6% profit target. Now, the nice thing is here, and those people who are in the trading room know that you can hold this overnight if you want, but for reporting purposes, we have to say, you know what? We have to get rid of this by 4 o'clock market close. So sometimes you're going to see a bit of a loss on this thing, but that's only because, the Eagle people want us to show that it is now off the board and whatever you got for it at market close. Again, 3.99 a quarter, 14.95 for the year. An incredible bargain there, but the real okay, the best thing we have is the trading room. I'm not going to kid you. This is where we teach you how to fish. The other programs are great. We throw you a fish every day. You can eat every day. But this is where we actually teach you all this stuff. John and I host this every morning. Interactive, learn and earn, fully narrated. And this is where our strategies come alive. You heard us mention the OMG strategy out of the morning gate. This is where we do it. Every morning, 9:20 to 10:30 Eastern Time. These are also recorded. I know there's some people that are living, far away that they're not on Eastern Time zone and they get to just watch it later, but they learn from it, so they are able to trade, wherever they are, even though it might not be the same time slots, but they understand what we're doing. This, folks, is 24.95 a year or 6.99 a quarter. You might think it's a lot of money, but it's actually not. And after you start making some money, you'll quickly notice that the price of this education is going to be quickly forgotten. You're going to say, "Wow, I don't remember that." That's yeah, okay. That's a lot of people make up the cost of the program very quickly, like within a day or two. Now, I also have a comment once in a while that says, "Oh, I don't know how to trade. I shouldn't be in the trading room yet. I shouldn't be in the trading room." I said, "Well, yes, absolutely, you should be." Because if you know what calls and puts are, that's where you should be. You don't have to know. In fact, that this is a training session. If you knew what we're doing, then you wouldn't have the need to be there. So you want to be there, right? You want to be there. But I'm going to be frank with you. Yes, you should know what calls and puts are. We're not going to, we don't go back to that level. That's just a very basic thing. Calls or contracts you buy if you expect the market to go up, and if you expect the market to go down, you buy puts. And we do talk about pretty basic things there. We'll discuss theta and delta. We'll talk about all the various reasons why we buy what we buy. So it is actually a training session. It is interactive. So when you do have questions, put them up on the board. We strive to answer the questions. All right, we really do. Folks, that's what this is. But here's the cool thing. All of these programs offer a 30-day money-back guarantee, except for the live event, as you can well imagine, right? It's a live event. You're not going to go to the live event, take in the 2 days of great information, and say, well, I didn't like it, I want my money back. That's not going to work. So, but anyway, if you really don't like the programs, they're not for you, and we get it. Not everybody's going to want to be a day trader or do what we do, and that's fine. And you've got right now a 30-day money back guarantee. Now I'm going to tell you something. All right, and this is kind of important. They're talking about scaling back that 30-day money back guarantee. All right, to I think 2 weeks or something. So, which makes total sense, and that's the way it should be. 30 days is a lot of time. So, but I'm going to tell you something. If you buy now, you'll get the 30-day money back guarantee. All right. Uh, when they scale back the 30-day money back guarantee and then you buy, then you'll get it for whatever the new guarantee is going to be. But it won't be that long. So buy it now. Right? There's your key right there. All right. You like to answer this question live. What is the question you have? Mark S., I don't have a question for you live. I'm not sure what your question is. Let me go back here. Okay. Wow. Okay. Just on the phone, just okay. Okay. Rainy. Okay. Just so you know, the trading room link does not work. Yeah, it says yes. I will get that. Okay, so the trading room link will be updated As soon as we finish this session, I'm going to go in and fix it myself. So, explain the pitchfork. Pitchfork is going to be explained under John's purview there. He is the expert with the pitchfork, and that's where we're going to do the training in the trading room and also at the live event. Derek, I would suggest if you're not in the trading room that you would subscribe to that because uh, John will go over the pitchfork there because that will also help a lot of other people as well who would be in that. So, all right, what are the trade numbers for this week on those days? Okay, I didn't have a chance to go through the trade numbers. I think we had a couple losses, but it's been not too bad. What does hawk versus dove mean? Oh, dove mean. Okay, that's a good question. Hawkish and dovish. Okay, so the Fed Reserve members. There's a group of these members, and they all get together and they say, "Well, I think interest rates should be higher or stay the same, so we can push inflation down. We want to get inflation down to 2%. It's still over 2%. Our target is 2%. We need to keep interest rates high." That is hawkish. On the other side, those people that say, well, we need to bring interest rates down to help employment because when you have lower interest rates, companies have it's more affordable to make investments into their companies. They hire people, and it helps employment. So you have this clash. Keep interest rates down for inflation, or help the employment situation. So when they want to push interest rates down, that is dovish. Dovish means they want to go down. Hawkish means they want to go up. Okay. I ended up, let's see, I had some calls. So I was at the dentist on Friday. Couldn't even get to the trading room. Later on in the day, I came in. I didn't like where the market was going. I was sitting in some calls from, I think, a couple days before. I dumped them. I got a loss. But I didn't want to hold them over the weekend. I thought, you know what? I don't like where this is going, and I figure I'll just and to me, when the trade no longer makes sense, it's probably best to get out of it because I don't want to turn something that I believe is going to work in a certain way into a chance kind of situation, where like a gamble. I don't like to gamble, so for that reason, I thought I'll just take the loss and look for the next trade, right? Okay. Hmm. Okay. I don't know what the follow-up was on Friday. He did the thing, so you should check your inbox for Friday's trade. He would probably have, excuse me on that one, he would probably have the updates on Friday's trades. Chris Y, or come into the trading room and ask and see what he did on Friday. I have no idea what he did on Friday, so our trade tracking spreadsheet is available. Okay, those people who are in the trading room, you have a portal to get our 2026 goal spreadsheet. All right, so you'll see it up in the trading room up there. So you log on, and the trading room members, you log on and you go up to the top where it says trading room. Click on that. I think it's the bottom one, third one down or something. Click on that, and you'll see a bunch of reports available. And that spreadsheet should be the one on top. Click on that. You'll download that, and that spreadsheet is there. And I believe you can probably, well, I think you can enable it as well and put your own numbers in on that one as well. So, the pick of the day. Okay, so. I don't have the numbers for Friday's pick on that one. That should have been released in the follow-up report on Friday. So check your inbox. If you don't have that, check in with John Johnson, and ask for that. Um, let me see. Question: any chance the 697 calls might improve this week to reduce losses? Uh, there's going to be some news coming out this week. It's going to be mostly technical trading, I think, but there's going to be some news coming out, as I mentioned earlier. We do have some data, some PMI reports coming out. The market, I'm guessing, and also from a seasonal standpoint, we did say that the last 5 years the market did go up 5 points this week. So if we track the same as we did in the prior years, we should see an increase. The question is, will it go up enough to cover the losses and the theta loss? That's the key. So, but I would not hold on, Robert. I would not hold on to that much past Wednesday. If you don't see a real improvement in there, I would probably look to dump that Wednesday. I wouldn't want to hold that into Wednesday. So, okay, question here. How do you decide to buy a put when the call trade starts dropping? Well, I mentioned earlier in one of the charts that when it breaks that neckline, right, that support line that's going down for the count, all right, you might want to get out of your calls, get into puts, write it down, and take the profits on the puts. Okay. Now, it doesn't mean it's going to go down forever, and if you have time, you should be fine. And this is what I'm going to address in my newsletter with the theta loss, which is why I like to buy time, even though I'm looking to buy. Okay, so here, let me explain something to you. The way we trade, we like to get in and out, preferably in a few minutes. All right. But it doesn't always happen that way. And people often ask me, well, why don't you buy the same day expiration if you're going to be in and out in a few minutes? And I say, well, that's the plan. But here's the thing, the market doesn't always go to plan. And I could be in the same day making some pretty good money, and all of a sudden something happens. Somebody says something, or just somebody looks the wrong way, and all of a sudden the market tanks on me. Well, they suck the premium out of those same day options very quickly, and they don't put them back quite as quickly. And oftentimes the stock has to go considerably higher than where it was before to get the same premium. Meanwhile, you're losing theta loss during the day. And even if there's a 1 hour gap in there that you stumbled over that trade, well, you could lose some pretty good theta loss. But if you buy time, so we like to buy time on Mondays and Tuesdays, we like to buy the same week expiration Fridays. Wednesdays, Thursdays, and Fridays, we like to buy the following Friday's expiration. Now, even though we like to get in and out in a few minutes, but you'll find that the theta loss in those longer term trades is not that bad. It doesn't stress you out, so you don't have to worry about that so much. It's still there, but it's not a pressing thing that you have to really be concerned about. You actually have time to go get a coffee or go to the bathroom. Okay, is the way I like to put it. Um, and yes, the options cost more, but you're going to get it all back when you sell anyway. Okay. So, and as long as there's good volume, there's good liquidity, you should be fine. And that strategy saved me so many times I can't begin to tell you. Yes, you're paying more and it's more attractive to buy same day expirations because it's a lot cheaper. So if you get a dollar option, same day expiration, you can buy 10 contracts for $1,000 versus maybe only, 3 or 4 contracts, later on in the week. But you get it all back anyway. So it's not like you're losing the money. But, it's all about risk and reward, right? The greater the reward, the greater the risk. It's always going to be risk reward. It's always going to happen that way. I see I'm running out of time here, so. All right, question. I'm new here. Welcome, Terry. Terry W. Welcome. Is there somewhere where it spells out your bread and butter trade and scalping strategy? I get your OMG strategy and her details on the other two. My question to you, Terry, Terry W., are you in the trading room? If you can be in the trading room, we go over all of that in the trading room. And I believe there should be, let me see here. Take a look at the newsletters. Let's see if they have anything on on the workshops as far as so the scalping strategy. So if you got to go to our website, daytradespy.com, where it says online workshops, um, there's the bread and butter strategy workshop, $249. Setting up our charts, chart patterns. I thought we had some more workshops in there. I don't know, for some reason they didn't put them on there, but our scalping strategy workshop. But if you, so the bread and butter is down here, and the scalping is up there. Okay, so you can get these, or what I would recommend is the um, entering the trading room, because we talk about that all in the trading room. Okay, so that's where you're going to get the information in the trading room, and then we actually do we do a lot. We net we get into that very heavy. So it's really is meant to be a training session in the trading room. So. All right, real quick, a couple more questions, then we're going to get to our contest here. What happens when you get a bad trade? It expires on a Saturday. Trades don't expire Saturdays, they expire on Fridays. But the problem is if you're holding lots of time into the following week and you are um, into into next week or whatever, you don't want to be holding these things into the weekend because what happens is the theta loss eats away at it. So even if your theta is, say, I don't know, 30 cents. Well, you want to know how much the stock has to move to make up for that 30-cent loss. It's not 30 cents. You have to take the 30 cents and divide it by the delta. So if your delta is, say, 45, sorry, knocked the microphone. So you take the 30 cents theta divided by the delta of 45, you come with a number of 67. That means the stock has to move 67 cents in your favor just to make up for the theta loss for the one day. That's Saturday. Do it all over again Sunday. You are looking at $1.33, $1.34, $1.35 for the weekend theta loss that the stock has to move just for that time value that you're losing. So that is the reason. That's the reason you really need to pay attention to theta. It's not a joke. Okay. What are your current trade recommendations? Thanks. I don't have a trade recommendation. What we do is in the trading room, that's where we get into our recommendations, also the pick of the day and the signal. All of these recommendations are determined the same day in the morning, pre-market. When the market is open, that's when we actually determine what our recommendations are going to be. We can't really. I have no idea. It's right now 9:07 Eastern time and we are over 12 hours away from the market opening, and anything can and does happen between now and then. Uh, okay, is it true SPY was created to level the field for smaller accounts? Um, Oh yeah, so SPY is an exchange traded fund, all right. So those people that didn't, don't want to or can't or a little too complex trying to track individual stocks and sectors. And I used to do all that before. Let me tell you, that was a pain. And you never really knew, we didn't know, again, there's this way too many things to try and figure out. And if you miss anything, right? You miss anything, now you're in trouble. It's very easy to miss things. And even if you get things, you don't know where things are going to go. I could be in the financial, uh, sector, and I could say, okay, I'm going to take a position on Goldman Sachs or something, thinking that that's going to go up, and all of a sudden I find out, well, Goldman Sachs has a negative outlook or something for the next quarter, and Goldman Sachs tanks. Oh wow! Now everything pointed to the upside. I went to the upside. Of course, my stock goes down, right? You know how it goes. Um, SPY follows the S&P 500. Where the top 500 stocks go, that's where SPY goes. So essentially, you're looking at the economy in general. So what you're doing is you're trying to, level off the playing field, get rid of some of the noise. Uh, you know, cut the tops and the bottoms. Get that. Basically, well, where's the economy going to go? And by the way, the economy and the stock market are two different things. In fact, very often you'll get conflicting, patterns on that. If the economy is strong, the stock market goes down. And it's very simple if you think about it. If the economy is strong, that means it's very inflationary, and the market does not like inflationary because inflation attracts higher interest rates, and the stock market does not like that. The stock market likes lower interest rates. All right, so let's take a look here. Okay, yeah, get into the trading room. Terry, ask the question in the trading room. Any questions you have, get right into it. Folks, right now what we're going to do is this. We're going to get into we are going to do our random number generator. And what I'm going to do is I'm going to bring this. Okay, so this is not the number, but what I want you to do, folks, in the next, say, 20 seconds, let me just check the clock here, punch up a number in the, okay, I got to get rid of this. Hang on a second. I'm going to pull up the number generator again. Where did it go? Okay, I'm going to pull up my random number generator here. There it is right there. This is not the number 46, that's from before. But in the questions box, I want you to put up a number from 1 to 100. 1 to 100. And the winner gets uh, tips, tricks, and traps. This time it'll be tips, tricks, and traps. All right. It's an ebook. I think it's about 40 some pages long. So just download it, print it off, and uh, and then just give us a number. So punch up the number, folks. The person closest to the number that we are going to generate here wins the ebook, tips, tricks, and traps. Excuse me. If there is a tie, then you'll both get it, or three of it. Or if there's a 10-way tie, you'll get all of them. Okay, so all right, give you another 10 seconds here. Punch up the number in your questions box. And what we're going to do there is, let me see here. All right, let's go. 5, 4, 3, 2, 1. Okay, that's it. No more numbers. All right, now we are going to click on this thing here, hit the button, and the number is, all right, 3, 2, 1. The number is 26. 26. Let me take a look at the numbers here. Who is going to be the closest for tips, tricks, and traps? 20. Oh my gosh. Okay. Well, we have a winner. Terry. Terry W. Terry, I'm assuming you're a female with the way the spelling is on that. Let me know that. That's good. Congratulations. Anybody else get a 26? Let's take a look here. David R. came in close. A 27 close only counts in hand grenades and horseshoes or something. Okay. Terry, yes. Okay. Congratulations, Terry. You win tips, tricks, and traps, and I will get that to you soon. All right. That was fun. That was fun. All right. What else we got time about? Okay. So these are the links to the various programs I talked about. The live Baltimore event right here. This, by the way, these links are not payment links. They are, but they're not. They're links to a web page that gives you the information, and you scroll down at the bottom of all that information they give you. That's where you can make your subscription and make your payments. Okay, so don't feel like all of a sudden it grabs your wallet and shakes you down. It doesn't. So I'm going to leave this up here while the song is playing. And thank you all for joining us, folks. It's really been a pleasure. Have a good night, everybody.
You really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear. I know it's been on your mind for a while, but to get what you really want can take some time. You gotta be focused now, don't play around, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear. Loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear. And there ain't no stopping now. You're the one. Shine brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave.